good morning, Trinidad and Tobago, and welcome to the Bourse Report. Well, last week we focused on what would have occurred in stock markets for the first half of 2022. Today we are focusing on the fixed income markets and what investors would have endured for that first half and what they may expect in the coming months ahead, both in the Trinidad and Tobago dollar and US dollar fixed income market. So let's get straight into it. At the local level, there was not much action in terms of price movements or major interest rate changes, and that could have been seen in a fairly stable yield curve or government of Trinidad and Tobago yield curve in that green line, which would have pretty much been on the money or very similar to the December 2020 and December 2021 yield curves. Some changes, though, on the shorter end of the yield curve in that two-year space, with two-year rates of government yields rising from 0.92% to 1.75%. So certainly some changes in that short end of the curve, but otherwise fairly stable, reflecting still fairly strong demand, or rather a relative lack of supply of government securities for fixed income investors, as well as no major changes in perceived credit risk. But on the short end, that climb in interest rates or climb in yields, perhaps reflecting an increase in inflation expectations. And when we take a look at inflation, we can see that certainly upward trend that has been taking place on a consistent basis over the past 12 to 15 months or so, with headline inflation in that purple line registering at 5.1% based on the most recent data available from the central bank. And that has really been driven by food inflation in that green line, which has climbed to 8.7% year on year, as well as an increase in core inflation of 4.1% year on year as well. And that's what have been driven by food and rental prices, etc. And all of that is really contributing to a higher cost of living and driving short-term yields, which tend to be controlled by inflation up in the short term. So what can investors expect on the Trinidad and Tobago side of the market for fixed income options and opportunities? Well, expect high inflation as global issues persist in terms of supply chain constraints and other event-driven risks, which are keeping agro and energy commodities prices inflated. There continues to be excess liquidity, however, in the Trinidad and Tobago banking system, averaging about $5 billion over the past couple of weeks. There's the lower likelihood of increased bond issuance, and indeed, the Honorable Minister of Finance did mention in his mid-year review that there would have been no need to come to the market for any new bonds during the course of the first half of the fiscal year 2022, and expect lower interest rates despite that high inflation, given that most of our inflation in Trinidad and Tobago tends to remain imported, and that excess liquidity is again persistent, and that there's the need to stimulate economic growth in the domestic economy outside of that energy sector resurgence that has been taking place. Turning quickly to the international side, well, it has been a stark difference in terms of interest rate movements. There has been a fairly significant increase in yields of US government bonds, and we can see that from the 31st of December in that turquoise line. Most of the yields have increased by 100 basis points, or roughly 1% or more, over the past 6 months or so, and that has really led to a broad repricing of most market issues or most bond issues. And when we take a look at some Trinidad and Tobago US dollar bond yields, we can see that there has been quite a significant jump in terms of pricing. Let's take a look at NGC 2036 bond, for example. This is a US dollar bond, and over the past 12 months, it would have traded as low as a yield of 5.4%. But in the current environment, with sharply increasing US dollar interest rates, it's currently trading at around 7% yield, which is pretty close to its 12-month high over the past 12 months, of course, and that has really been a consistent trend across most of the Trinidad and Tobago US dollar bonds. So internationally, we can expect higher anticipated interest rates once again. The US Federal Reserve setting the tone for other major central banks, and this is really being driven by the need to control inflation, which is expected to be persistent at an international level. And these factors combined will lead to increased market volatility in terms of bond prices at the global level. And of course, with the dreaded R word or recession looming at the global level, we can expect to see some deterioration in credit quality and some increases or some major changes in credit ratings over the next couple of months or so. So what can fixed income investors do in this particular environment? Well, in the TT dollar space, there is not much wiggle room or room for adjusting and cutting and tailoring your portfolio, given there's a fairly sparse availability of fixed income instruments. But for the lower risk investor, you could consider shorter term maturities of 3 years if for bonds if available, or you could look at alternative fixed income type instruments like repurchase agreements and income funds. For the moderately risky investor, consider investment grade bonds or look at shortening your maturities, but staying within that 4 to 7 year band. Again, we have an amber light on that because, again, there is fairly limited availability of bonds to make those adjustments. And for higher risk investors, you can look at speculative grade bonds with both shorter and longer maturities if the yields are attractive enough. Again, in the TT dollar space, that is dependent really on availability of assets. And in the US dollar space, much of those themes continue and persist, but they are all fairly well executable given that there's a much greater supply of bonds and options for the fixed income investor in the US space. Well, that's it for this week's edition. For more information, you can give us a call at 226-8773. Email us at invest@boursefinancial.com and check out our website, boursinvestment.com, where all of our research is absolutely free, and you can catch our article in today's business section of the Trinidad and Tobago Guardian newspaper. Until next time, keep safe and see you next time on the Bourse Report.